Okay. So this is chapter 2. We're going to be looking over and talking about returns of sales and allowance. We did purchases, returns, and allowance with a debit memorandum. We'll be doing credit memorandums this time around. Um, we'll be talking about posting what individual, excuse me, what individual items we need to post, what general total items we need to post. Here are the items for which you need to be highlighting. Just some, read the chapters like always. If you got time, put this together. Instead of giving it to you, I thought I'd just highlight these. Talking about our why it's important that we have department goals. The accountants, the people can look at their um, numbers, how they're doing. They can set up bonuses. They can figure out what they need to work on, where their profits coming from, et cetera, et cetera. Okay. Then we're going to talk about sales tax. We're going with the 6% sales tax. Local, state governments, nonprofit colleges, things like that, nonprofit organizations, they're all exempt. We have a Central Community College as a tax exempt customer of Wiley. We're going to have sales invoices that are in duplicate. This is accounting, generally accepted accounting principle, objective evidence. We're going to record revenue, the realization of revenue, and recording revenue even when we don't receive cash, even if it's on account. The sales journal, if you recall, has the same situation over here. Sales slips. This just break again just means that da 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 da. They're just showing you different. There's a bunch of other ones laying here, but we're going to be debiting the accounts receivable when we make a sale on account. We'll put it in the sales journal. It doesn't have a sale for cash. That would be cash receipts. We're in the sales journal. You'll be recording sales tax payable credit. Our sales credit now has two different departments, the grills and the furniture. So the two credits should equal the overall debit that you will post to that account. And so that's what they're giving you here. They're giving you the number plus the tax, giving you the total. Excuse me, mastery problems might not give you the total. You might have to add them. They might only give you this. You might have to multiply by 0.06, however you want to do it. Again, why we have to keep track of our sales tax because we will later have to pay the state. We'll do that at the end of the month. Again, they're talking about how the college is not taxed. We have a problem, when you're looking at posting our transactions, individual amounts and accounts receivable to each vendor that is charging items to us will be our services, whatever we got. We're going to post that. Excuse me. We're going to post that to their company. We're not going to post these individually. We'll post these special amount columns totals individually. So we'll post the accounts receivable vendor individually, as you can see there. And that's what they're talking about here. Okay, we'll use the S as the sales post reference. Sales taxes are paid monthly, so at the end of the month, we'll then go ahead and pay these. Then you can see we will total accounts receivable, post the total to accounts receivable, post the total sales tax payable. Excuse me, post the totals to all those general accounts. And that's what they're telling you down here. Journalized sales returns allowance. Remember last time we had debit memorandums. Now we have credit memorandums. They got all the information here. Basically, what is happening is somebody is returning something for either a return, meaning it was damaged, broken, duplicated, wrong color, wrong size, wrong item, whatever, or an allowance, meaning maybe we had it damaged and we just are going to knock some cost off. Either way, we're going to record it the same as an account receivable credit to the company because they're returning so much of the item that we don't have to charge them for that anymore. And so when we add a credit memorandum, we will credit accounts receivable and the vendor, and we will debit sales returns allowance, and then we also have to give back the sales tax payable. because we don't want to be paying the government for sales tax on items that were returned that we didn't charge them. We would be losing money. So this is an item that we sold to somebody that they're returning for whatever type of reason. Okay, and then we got information about a credit memorandum. Obviously, sales returns and allowances is going to have a debit balance. It is a contra account to sales. Again, they have some, T accounts down there for you to look at and see. And then when we post these credit memorandums, again, you will post each one individually. Our credit, accounts receivable, and the vendor, Taylor Apartments in this case, you see there you'll post twice. Once to accounts receivable, the controlling account, and then once to the vendor on that subsidiary ledger. Okay, so that's the notes for 2-1.